In 2025, something strange is happening. The economy is slowing, wages are stagnating, jobs are vanishing, real estate is buckling under pressure, and yet, the stock market is booming. On Wall Street, it's euphoria. On Main Street, it's a survival. How can these two realities exist side by side? We're seeing record highs in the S&P 500, even while consumer sentiment has dropped to its lowest levels in years. Bond yields are rising, the dollar is weakening, and geopolitical uncertainty is everywhere. Inflation hasn't gone away, especially for food, housing, and energy, and yet investor confidence remains untouched. Why? Let's break down what's going on. Back in April, when the US announced new tariffs on imports, markets dipped briefly. But then they came roaring back. The average tariff rate is now the highest since the 1930s. Yet major indices barely flinched. GM and Ford are reportedly paying up to $1 billion in tariff costs each quarter. Still, their stock prices are holding up. At first glance, this doesn't make sense. But it does if you realize that we're not living in one economy, we're living in two. Corporate America, especially big tech, is growing profits, cutting costs, and leaning into AI. Companies like Microsoft and Meta are reducing headcount, not because they're struggling, but because AI is making their workflows more efficient. Meanwhile, household America is struggling. Wages haven't kept up with rising costs for housing, insurance, food, and medical care. The average family is spending more and getting less, even while corporate earnings grow. The divide has triggered a dangerous dynamic. Tech firms grow even more dominant, sucking up market capitalization. Stock indices become increasingly top-heavy, with the top 10 S&P companies priced at 2.2x the index average. AI boosts productivity but eliminates jobs. Home buyers are squeezed by high mortgage rates and sky-high prices. One-third of U.S. cities are now seeing falling home prices, not because housing is affordable again, but because nobody can afford to buy. At the same time, bond markets are flashing red. Yields are rising, Treasury futures are sliding, and public debt is ballooning. That's a sign that long-term investors are growing skeptical, not just of the stock market, but of America's entire fiscal outlook. The U.S. job market is also showing cracks. Revised reports show far fewer jobs added than expected, with a rising unemployment rate. The sectors doing the hiring? Healthcare and services, the ones slowing down? Construction, manufacturing, and trade, the engines of the real economy. Even the housing market, traditionally a backbone of U.S. economic confidence, is faltering. Locked-in homeowners won't sell, first-time buyers can't buy, and rent remains a nightmare. Underneath all this is a more serious concern: the foundations of American prosperity, a strong research sector, global trust, stable institutions, are being questioned. In 2025, that uncertainty is being priced into bonds but ignored in stocks. So why is the stock market still booming? Because markets don't always reflect reality. They reflect expectations. And right now, investors expect interest rates might drop if job losses continue. AI will continue driving profits, even if it hurts labor. The top 10% of asset holders will keep spending. In other words, the rally isn't about broad economic strength. It's about concentrated profits, AI-fueled optimism, and the hope of future rate cuts. Meanwhile, the Fed is facing political pressure, public mistrust, and rising losses. Public debt is at historic highs, and a generation of young Americans feel locked out of the system. That's not a foundation for sustainable growth. That's a house of cards. The next time someone says the economy is doing great because the S&P hit a new high, remember this: the stock market isn't the economy, and right now, the economy is hurting. Corporate profits don't equal household well-being. Rising asset prices don't pay your rent. And the Dow hitting 40,000 doesn't mean your grocery bill just got cheaper. The market can boom even as the economy cracks. Just make sure you know which one you're living in. If you found this breakdown helpful, subscribe to InnerEconomics for more cinematic deep dives into the strange world of money, psychology, and power. Hit the bell so you never miss an upload. And remember, the real economy isn't just numbers, it's people. Thanks for watching.